Hello traders, welcome to the weekly outlook setups volume 290. As always, we're gonna jump into the market, see what happened this week, see how our forecast played out, and most importantly, try to draw some forecasts for the incoming week. So without further ado, let's check out the economic calendar and then jump into the technicals. Alright, a lot of stuff on the economic calendar. So Monday we're starting with this manufacturing index. Could bring in some volume, but usually on Mondays I do not trade Forex and gold. Futures maybe. So on Tuesday then we have some JPY monetary policy here, and then we have retail sales for the US dollar. So Tuesday definitely a trading day. And pretty much the highlight of the week is the Fed fund rate and of course the press conference. That is happening a little bit too late. So for me, Wednesday will be a full skip day. I will be waiting for this to get out. I will be waiting for the press conference to be over because of course that is definitely going to bring in a lot of volatility in the market. And then of course Thursday and Friday are definitely going to be trading days. Now, something that worries me is that we have this Juneteenth bank holiday. But very likely I will be trading Forex and gold. Futures, maybe not, if really there is, if the stock market is really closed. But of course, you can see a part of that. We have monetary policy for Swiss franc, monetary policy for the GBP, Aussie news. So Thursday also looks like a pretty good day. And of course, Friday is always 50-50 for me. It's always like Monday, for example. It really depends on what is happening. It really depends on what kind of setup we're getting. I usually do not trade on Friday, but of course, if there is a setup, I will be taking it. So that's the plan. Monday and Tuesday, definitely tradable. Wednesday, waiting for the Fed fund rate. And then Thursday and Friday, also getting the green light. A lot of news ahead, a lot of developments within the world as well. So let's have a look at the technicals and talk more about that. There are so many prop firms out there, but the one I prefer is FundedNext. First off, they have multiple plans, but my favorite is the Stellar plan because you actually get paid to pass your challenge, which is a huge incentive to treat it professionally. They offer a 95% profit split and payouts hit your bank account in under 24 hours, or else you get paid $1,000. FundedNext offers competitive profit targets and crazy affordable pricing. Like for just $32, you can control $5,000 account on their Stellar Lite plan. It's crazy value and they accept all payment methods, credit card, PayPal, even crypto. FundedNext is well established in the UAE with a strong reputation, rated 4.6 on Trustpilot with over 27k reviews. I trade with them, my community trades with them, and we love them. Now it's your turn. Use the link in the description plus code FANATICFN for 120% refund when you pass your challenge. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. Alright, so let's get started with a DXY. Now, of course, I will do that reverse engineering thing that I have been doing for a while. I did get overall good feedback. However, the thing that I kind of do not love a lot is that, of course, we're making a forecast right now on a Saturday or on a Sunday. And then, of course, we have developments over the weekend, or Monday, of course, opens, and it's kind of, you really don't know where it wants to go. So again, the true skill of trading is actually flowing with the market, not forecasting too much, not trying to predict where the market's going to go too much. Every single day you show up, you see what the market is literally telling you, and then you, of course, flow with it, okay? And I'm literally showing you in the weekly outlook how I go about this process. So again, you can see here on the DXY, I was honestly looking pretty bullish because we had a sweep of that low. We had this very nice introduction of bullishness. We had 4-hourly bullish imbalances, but then again, you can see Monday opens here on Monday, right? Monday opens on Monday, well, for sure. We tap in, we react very nicely from that 4-hourly zone, but then the next candle invalidates that zone. Okay, so after this thing happened within the first 8 hours of the market, when I'm even sleeping, I'm no longer looking for longs, right? Then it comes into the other one, kind of reacts, and then it starts chopping, and then it tries to push up, it fails, it chops. And then finally, on the CPI day, on Wednesday, that is when we flushed, and then pretty much Thursday was the only kind of really good trading day where the market actually completed that massive liquidity level. So again, you can see we had literally 3 days of a chop, right? 3.5 days of a chop where Wednesday came in, CPI, okay, and then literally the trade of the week was right here Thursday in the morning, right? Pulling us back into that imbalance, and then of course reaching for that massive liquidity. That was the trade of the week. And again, We were just waiting and waiting and waiting and waiting, and then as the market gave us the signs, I just started unlocking towards the liquidity. Then pretty much it became clear where it wants to go. Now we are in a very, very, very key positioning right now, because we're taking that massive monthly swing point, and of course, like, we kind of came in to sweep that one, but already we have been kind of staying at this low for 2 months, and I don't think this is a sweep anymore. Why? Well, because the market is comfortable below it, right? If that was a sweep, the market would have already started pushing higher, but currently doesn't really look like a sweep. So currently we're coming back at that a low, just taking it out. Again, we're having a week on the weekly time frame. And then on the daily time frame, what is interesting is that we actually had a daily bearish imbalance, which is the first imbalance that we've had for quite a while. We had one bullish here, and since that failed on the 29th of May, right now it's 13th of June, and for the first time we're having a daily imbalance. Now Friday came back into it and rejected. Okay, so if that was a very fresh day here, I would definitely be looking for shorts targeting that liquidity. Okay, and then of course I'm gonna go to the 4-hourly time frame to see, okay, do we have any other sort of confluences and stuff? Well, what we have is a 4-hourly bullish imbalance that is kind of a this is what I call a supply and demand sandwich, where the market is stuck between imbalances on different time frames, and really to get the highest probability, you have to wait to see which one is going to prevail. Because right now we just tapped again, we massively reacted from that daily. You could have taken a short from the daily into the 4-hourly. The market is right now reacting from that 4-hourly. So if, for example, Monday or Tuesday we start breaking and closing below this reaction area, I will be looking for shorts. Okay, we can see that on the 1-hourly time frame, the market. I'm right now on the 1-hourly, but I'm literally showing you what I would be doing if I was trading live right now. This is what I would be looking for. You can already even be looking for shorts here, but if the market clearly breaks and closes below this structural low, this is also going to create that low, lower high, lower low formation. That is pretty much the most powerful trend change you can have. And then I will be looking for the liquidity. Okay, so that's it. Okay, that is overall my outcome here on the DXY. I'm looking for shorts. The overall fundamental sentiment is also shorts. We have been seeing it. Even stocks are US stocks are dropping right now. DAX is dropping right now. The dollar is declining. The euro and the pound are getting stronger and stronger. We're right now having conflicts between Israel and Iran again. China and the US are having some little developments here and there, but still it's a little bit vague. They say, okay, deal is reached, we're very good, we're friends with China, I love China, blah, blah, blah. But we still haven't heard anything very, very specific. Okay, so when we have this, then we can potentially see a little bit of a strength of a dollar. But fundamentally, Trump's plan has actually been to depreciate the dollar in order to make trade a little bit easier. So again, fundamentally, DXY is bearish. So again, the bias is short. And this is how we're currently looking like. Let's see if we're going to attack that liquidity. And again, guys, always be aware of the other scenario. What if the market breaks above here? Prints of vol imbalance, we can go higher and target the liquidity. Okay, that is going to be the second scenario. So let's see. So here we are on EURUSD. Again, as I was having that overall kind of bullish bias on the DXY, I was kind of a little bit overall bearish on the euro. But again, we can see Monday opens, kind of pulls back into this 4-hourly zone, not 5-hourly. And kind of we react, but then what we started doing is we chopped once again. Okay, so really absolutely no clarity here all the way until pretty much mid-Wednesday when we had the CPI news release. And then the market literally just rocketed. So again, could you have taken a long here? Probably. Definitely you could have found a long. There was an extremely small zone right here that was setting up the long. But again, I do not trade before CPI. Okay, and then we had the CPI, the market rallied. And there was an absolutely beautiful 15-minute long right here from that 4-hourly zone, targeting then the next liquidity. Okay, so do you see how, of course, I make that outlook on Saturday and Sunday? I always do that. However, then it's all about flowing with the market, following the news and really waiting to see where it's gonna pretty much the direction that it's gonna show you. And the only trade, for example, that we took was this one. Okay, we didn't trade Monday, we didn't trade Tuesday, we didn't trade Wednesday, we didn't trade that. And then of course Thursday came in offering clarity, then we take the trade. There is the trade of the week, right? This is the move. So should you try to kind of go short here and go long here and go long here and go long here? No, just wait for the market to show you where it wants to go, and then you're gonna catch your train. All right, now we are taking that massive liquidity here once again. Nothing on the weekly. We have that monthly below us. So let's see. The key question right now is, are we gonna sweep that high? and start returning back into the range, or are we really going to start breaking it and starting to close above it? Now, what I really like is that, again, for quite some time, we haven't had a daily imbalance, and right now we're having it. We're having a daily imbalance. We also have this block here to support it. That's sell to buy, which is very good. So we had Friday as an overall inside bar. We can see the DXY tapped into the daily and rejected. EU is not coming back into the daily right now. So a little bit 50-50 here. So let's drop to the forward time frame. And then as we drop here, we can see we have a very small forward zone right here, but this one actually got tapped right there. So that is invalid. So we're not going to use it anymore. We're just coming to sweep that high, and there is no forward bullish imbalance. So do you see right now that we don't have a lot of clarity right now? We don't have a lot of zones. I can already say, for example, this one can potentially start going bullish, attacking that liquidity target. But I can also say that we can, if we start seeing some bearish pressure on the opening, we can definitely pull back into that daily, okay? And then from the daily, we can attack the high. So either two scenarios here, right? We either, like, you have to observe the 1 hourly here, similar to what I told you on the DXY. So for example, we have this 1 hourly zone here that the market is holding. It's currently kind of making that trend change formation. So if we have a new high being created here, potentially even with an imbalance, okay? So some sort of imbalance here, either on the 4 hourly or on the 1 hourly, we can be trading long. But if the market opens and starts going lower, then of course you can target this is liquidity, the daily imbalance, and then from there we can look to see if we get alignments bullish. So that's EU. I would say overall long bias right now. Of course, be aware of the bearish scenario, because hey, something could happen in the weekend right now, some new developments, maybe China and then this and that and whatever, right? Anything can happen, and then the market absolutely dumps. So be prepared for everything, especially in the current market conditions. But currently I'm going to remain more long bias on EU. So let's see how it's going to play out. So having a look at GU, this has been a little bit slow this week, a little bit more fundamentally driven. We had, I believe, UK GDP or unemployment claims or something like that. And this caused the market to really fall right there, while EU kind of constantly maintains that overall bullish vibe, and then it absolutely rocketed higher. You can see GU was very 50-50, and you can see even my outlook here, kind of, yeah, we could have gone bullish, but we kind of tapped in here. We didn't really show continuous bullish order flow, and then we reversed to take out the liquidity, and then of course we pulled back here, okay, to give a little short right here, pulling back into the imbalance, a little short, but we kind of failed to reach this liquidity low, all right, and even this liquidity low, and then we start seeing bullish signs. But then on the way up, this is why, for example, we traded EU on Thursday. On the way up here, we did not have zones, no hourly bullish imbalances to potentially trade from, and still it ended up taking that liquidity and pulls back. And again, like if I just delete everything here, what is this doing, right? It's chopping around, right? Even if I enlarge it like that, you can see we're not really trending right now on GU on the hourly time frame. Okay, so let's of course see if we can get some value from the weekly. Not really, things remain the same. We have a weekly bullish below us, we have a weekly block below us, we have the monthly bullish below us. So again, nothing changed. The market kind of keeps throwing wicks into the highs, like making higher highs in terms of wicks, but really not committing to the upside. Daily time frame, quite a chop. Okay, like again, we're kind of sweeping the high here, we're sweeping the high here, not committing bullish, no daily bullish imbalance here, unlike EU. EU created a beautiful daily imbalance, this one did not. So it's not giving me a lot of bullish vibes. GU, it used to be a lot stronger than EU. Right now they flipped the script. Hourly bearish imbalance has been created here, but again, this does not really tell me much right now. I would not short from that hourly imbalance, because again, like we have been recently bullish, and just because right now, oh, bearish imbalance, it didn't even create a very strong structure break here, it kind of wicked it, and then we have this very massive bullish candle into the 4 hour. It doesn't create a hourly bullish. So yes, I mean, honestly, this one is a little bit confusing, right? Previous daily high and previous daily low taken on Friday. Quite indecisive. 1 hourly as well, kind of, it made that very big push into the 4 hour, but then we're having 1 hourly bullish, but then suddenly we're having 1 hourly bearish here, right? We have two, for example, 2 1 hourly bullish here, all right? And right now we have 2 1 hourly bearish. So currently nobody's in control, and you can even see this on the higher time frames. All right, on the daily time frame, nobody's in control. On the hourly time frame, really, there are just some short-term moves, but there is really lack of commitment. So I would say in this period, GU is just not looking good. If I were to pick between EU and GU, I would pick EU right now, okay? And honestly here, I don't know what to forecast. Again, we just have to wait in this case. There are a lot of times where, again, guys, it is not your fault for not having a bias. The market is not always going to give you bias, but when it's clear, that is when you capitalize, okay? You should not really right now try too hard and too much to try to determine where GU is going to go, because in my opinion right now, we don't know, right? It's choppy, it's sweeping up, it's sweeping down, it's in the middle of the range. We don't know. So again, what I usually say, well, wait for it to break out higher, wait for it to break out lower. If it breaks out higher, we keep following it. If it breaks out lower, we keep following it. We have liquidity targets on both sides. Okay, so let's see. That is GU, not my favorite going into next week. I mean, look at this thing, right? Who would actually trade Aussie dollar? Like, this is absolute chop happening right here. Of course, like, sure, it moved up, it made that hourly bullish imbalance here for us to potentially go long, but then it spent 1,000 hours until it actually reached the liquidity, and then it reached it, some bearishness, then some bullishness, then it flushed on some sort of news on Friday. Absolutely choppy pair. And by the way, I fully removed this from my list. I used to cover it for my morning analysis that I do for my private community every morning. Right now, I do not. Like, I'm not even gonna talk about it right here. Okay, we're having 5 or 6 weeks of doing absolutely nothing, just throwing wicks to the upside, bullish candle, bullish candle, indecisive candle. Dropping onto the daily time frame, it is absolutely ridiculous what is happening here, right? That massive consolidation, no zones whatsoever. And then dropping onto the hourly time frame as well, absolute chop. This is not tradable price action. Like, sure, right now we have that hourly zone. The market is tapping into it, looking like it wants to go short. So I can say, well, okay, we have this liquidity target. So if you truly start seeing right now the 1 hourly time frame to guide you bearish, which it does, okay, you can look for shorts, okay? But then after this happens, it's probably gonna start chopping again, okay? So there is kind of a little short setup being offered here. Let's see, did we have Aussie news this week? Employment change, we did not have, no, we don't have like interest rate or something like that. This pair is probably looking for some sort of a big catalyst. Extremely choppy. I would absolutely not recommend anybody trade Aussie dollar right now. But hey, this is the very recent price action. This is what the market is showing me. 4 hourly bearish. The 1 hourly time frame is also starting to give some bearish signs. It kind of looks a little bit like GU. Yeah, pretty similar to GU, right? And both of them are choppy. 4 hourly bearish, 1 hourly bullish. Right now the market starts giving a little bit of a 1 hourly bearish. However, the 1 hourly is still in that push pullback phase, which we can definitely also shift higher. I just do not like it, and I'm not gonna trade it, and I would recommend you wait for more clear price action. Well, NZUSD also a pretty big chop right here. So this one did not even take the liquidity on the top, and also it did not take the liquidity on the bottom. I mean, we're probably getting here a very big inside bar on the weekly time frame. So let's check it out. Yeah, wow, what a chop right here. So, I mean, nothing to say. I'm just not gonna waste time here. Absolute chop here on the daily. We absolutely need some sort of a shakeout, breakout here, upside, downside. I really don't care. We just need to get into some sort of a direction because it's choppy on every single time frame. The market is again stuck between this low and this high. This is kind of on the previous weekly highs and lows. And yeah, absolute chop right there. It made the move up. Right now made the move down. Right now pulling back. It's kind of again looking like Aussie dollar as well, with that 4 hourly bearish imbalance. And currently the 1 hourly time frame is probably giving us a little bit of a recent bearish order flow, right? And yeah, we can say, okay, we're gonna go lower, but again, guys, I have absolutely zero confidence, and I even don't have any motivation to be analyzing a pair like that, which is extremely choppy, without any direction, without clear hard time frame levels. So sure, I can say, okay, 4 hourly time frame is right now looking bearish, break the structure, imbalance, we can go lower to take out that liquidity. And I don't even have a confidence that the market is gonna do that, because here it also looked bullish, right, with that 4 hourly imbalance, but it never came in to take the liquidity. So let's see. All right, Aussie dollar and NZD dollar, absolute skip until they finally start making some sort of a move. I do believe we have NZD news this week, so hopefully there will be a catalyst. All right, let's have a look at gold. And damn, I drew so many zones, so many things, and my bearish bias was absolutely invalidated. However, there were some incredible longs this week on gold. All right. Again, since the start of the week, you can see I'm staying a little bit more of a bearish bias, pulling us back into that flowery zone and then potentially flushing. And sure, we came in the first thing on Monday, we came in, we reacted, and then we broke the reaction. Now, if you know how to trade imbalances, okay, which I haven't really taught on YouTube or anywhere else, you know that this imbalance is no longer relevant right now. It failed, okay? And I'm showing you how it actually works, okay? But then, of course, afterwards, we kind of had a new bearish here. So it was a little bit choppy, honestly, on Monday and Tuesday. Kind of it gave us a bullish sign, but then it pulled back a little bit deeper and it gave us that bearish sign. But then also the bearish sign was invalidated by a bullish one. So at this moment here, it was a little bit chopped up, and you can see it came in to react from that other area. But here what we had, which is very important, is that market structure shift pattern. Okay, we're having a low, a lower high that still looks like shorts potentially, although we got the first sign that the shorts are not in control by failing that first forward imbalance, and then we push lower. It's kind of okay, are we really long bias yet? But then we create a higher low and a higher high. Okay, so that is the market structure shift with a forward bullish imbalance. There were longs right there, but then of course we did not trade on the CPI day. The CPI threw a little wick, it was a little bit crazy, but then we had two incredible long setups that we took in the community here from these forward zones with an absolutely clear liquidity target. All right, there was even this one that got reached eventually. Gold is something that I am becoming, well, I don't want to say I'm becoming a specialist on, but collectively with my private community, we are working really hard on building a very refined trading plan on gold, and my members are getting funded and we're having a lot of success with gold. So very likely I'm just going to be concentrating again. I'm mainly trading three pairs right now, EU, GEO, and gold, but I don't trade even anymore EU and GEO, so I'm kind of really gravitating towards gold. And here, of course, we also had another imbalance that did not get tapped, and then on Friday the market just expanded, but it expanded during Asia because of the Israel bombing again Iran and all this awful stuff. And yeah, then we had actually another long setup here on Friday, but again it was very choppy and it was still contained inside the Asian range, and I usually do not recommend that you try to chase the Asian high or the Asian low to be broken. We usually wait for them to break out or fake out, and then of course we trade with the direction that is provided. So absolutely beautiful trades on gold this week. Now, where are we? We're still coming from that weekly. We're attacking the first liquidity target right here. Okay, what is the next one? All-time high. So are we gonna go to all-time highs this week? It's very likely. I don't want to say anything like that because of course things can change very fast, but we're having a daily bullish imbalance. We're having an absolutely beautiful bullish structure here, creating higher lows and higher highs. Daily bullish imbalance, we're having of course like this retest area here to look for a retest. We're having Friday candle being extremely expansive. That means that on Monday we can create another daily bullish imbalance if the market doesn't open and cross that line here, that candle one. So this is probably gonna be my plan. I wouldn't expect that the market is just gonna rocket on Monday and reach all-time highs. It definitely could, by the way, if something in the world happens, but my overall plan will be to potentially wait for that daily bullish imbalance to form right there on Monday. Okay, so basically I should type maybe Tuesday because we're going to be trading that daily on Tuesday if it forms, and then start looking for longs from there. Because if you have a look at the forward time frame, we had that forward bullish, but that forward bullish already did its job. It tapped in and it took the liquidity, and right now we don't have anything to push higher from. Okay, so that means the market is going to seek liquidity, and where is the liquidity? It's down there. Okay, and what I want to see created then is a daily bullish imbalance, so then we can tap into it and then to potentially continue higher. Okay, so this is kind of how I would forecast it right now, and this is a very bad forecast to make because I'm literally forecasting things to happen like out of thin air. I'm saying, hey, I want to see a daily imbalance to be created. Instead, what I should say is, okay, we have nothing right now, so let's see what Monday provides, and then of course we're gonna act. Okay, but I'm literally showing you right now what I want to see, and if this happens, I will definitely act on it. 1 hour time frame, there is no need to look at it right now. It's pretty choppy, so that's the plan for gold, guys. Waiting for Monday to close, waiting to see if that daily bullish imbalance is going to form, and of course if it doesn't form, then we're gonna have the lower one to trade from. But then from there we're gonna have a lot of bearish price action and really have to wait for the bullish price action to show up, that buy side of the curve, so we can really start trading it long. I would say once again, long bias on gold, but just a disclaimer, right? Last week I was bearish on gold, that I was showing short on gold, and then we ended up taking 3 longs. Okay, so just because I'm long bias right now, if the market opens and prints a massive daily bearish imbalance, I'm gonna start targeting the lows. Okay, so always be fluid. Let's see what's happening with USD/JPY. So here I had a bullish bias, pulling back into the imbalance, pulling back into the block. I mean, it worked out fine, and then into the reaction area, and then reacting and potentially continuing higher. But then since that happened, we entered into a very big chop all the way into CPI, and then CPI came out and we flushed, and right now we are pulling back. So okay, I mean, this long setup didn't it played out, but it played out in the worst manner ever. Chop, chop, chop. It came in, chop, chop, chop. So very, very, very choppy. I hope some of you took some shorts right here, because there was a little short right there again after CPI, after you really see what's going on. However, it kind of developed in a very improper timing, but I had one member of my community capitalizing on that short. So let's see the state right now. Weekly time frame. I mean, yeah, it's still pretty chopped up. And if you look carefully once again, we are still stuck inside this candle. This is the last candle of May. We didn't break it this week, and we didn't break it the current week as well. So we are in a consolidation, and then transferring that onto the daily time frame, right? You can see it a little bit cleaner, right? There are no daily imbalances. The last one we had was this bullish one that failed. No bullish, no bearish. The market is choppy on the macro time frames. What that means is that you should not be looking for big moves. You should only be kind of, if you really want to trade it, you should be scalping, targeting very recent liquidity points, and not really making any big claims or any big analysis. So what we have currently is we have that little hourly bullish imbalance here. To the left, we don't have anything. Is this really confirming to me the longs? Not really, but there is nothing daily bearish to stop price. I mean, let's see. This is very simplistic analysis here, but even I like it in terms of structure. Like, we're having that hourly break here. Now, I would definitely love to see a little bit more confirmation, so then we can potentially look for the longs. But that is a long on USD pair. I am more short on DXY, and they usually tend to move together. I don't know. USD/JPY is also kind of one of these pairs where you oftentimes kind of get conflicts between USD and the JPY, and it kind of ends up chopping around. This is why I don't trade JPYs at all. USD/JPY is the only JPY pair that I would touch, but I don't trade it anymore as well. So let's see here. In order for me to go long, I would definitely need, for example, another hourly bullish imbalance to be created, another break of structure, and literally for the market to start guiding me towards the liquidity level. Because if right now this hourly zone fails, well, guess what? It's gonna print something bearish, and then we can target the very recent liquidity as well. So you can see here, I'm having a pretty 50-50 bias. I'm not really convinced that this one is gonna push the market higher. You can definitely look to long it, and if it does push it higher, then the closer we get to the liquidity, the higher the probability is gonna be. However, for example, here you could have said, hey, we're going really bearish, we're gonna go and take out, for example, that low, but we did not. We didn't even take, for example, this low. So again, don't get too obsessed. Don't make too many forecasts. This is why I always tell my community, they sometimes like targeting like massive highs and lows. No, if you get a 1.5 hour, if you get a 2 hour, absolutely bank it. It doesn't matter if that is a 5 hour trade. You take your 2 hour and forget about it. All right. So that's USD/JPY. Not very convincing, but I would say I'm inclining a little bit more for the long side. But of course, if any shorts start kicking in and if the DXY goes bearish, you have to be very quick to adapt. The euro being super strong this week and USD/JPY not doing much, we are seeing, for example, a pair like euro/JPY develop very nicely. This is the only time when these JPY crosses are going to work out, is when the main currency, so for example, the euro is going very ballistic, and when the other currency, that is, for example, USD/JPY, because euro/JPY is a combination of EU plus USD/JPY, and when this one is kind of a little bit chopped up and then this one is absolutely trending, this is when you get pairs like euro-yen to be potentially nice. Again, forward imbalance, we had a pullback, and then the market continued higher. And then, yeah, it definitely doesn't look that bad. We can probably find a couple of opportunities here. There was no zone on the way up. We came into sweep. Then there is this long right there. Then there is this long right there. Then this one failed, and then bearish, and it's failing. So definitely 2 longs that I see right here that could have been taken. And I do remember one member of my community actually did take 1 long on EJ. A very nice weekly candle here. I really like it. We actually took out that very crazy liquidity from October 2024. That is a massive, liquidity that is taken. However, what I also do like, so this is when the pair starts looking good, right? We're breaking out, we're starting to trend. That's nice. We're having a weekly bullish imbalance. On the daily time frame, we're having a daily bullish imbalance. Wow, suddenly this pair starts looking good. We're coming from that massive sweep, we're pulling back into that daily zone. And right now we are kind of looking a little bit more bullish. This is the very recent liquidity target. We had a hourly zone. That is our supply and demand sandwich. This one is failing, and we're not getting a hourly bullish zone. We have a very small one right here. So the current positioning of price is very, very, very tricky. It's kind of very close to the liquidity. So I would say it can already pop that liquidity on the open. Very likely, because it wouldn't really make sense for the market to be making something like that and then attack the liquidity. It's probably going to take it and then pull back and then maybe continue to go higher. The 1 hourly time frame, so if the 1 hourly time frame here gives you a bullish imbalance, you can definitely look for a quick long, okay, even on market open, because I really do like that bullishness. I really like how this last hourly candle pulled back and made a very nice wick. So we can definitely head for that liquidity target. That definitely looks like a good setup. So let's see. Okay, bullish bias on euro yen. Of course, that one, these JPY pairs are very short-lived. They can move like very nicely like this week, and then they're gonna have like 3 months of doing nothing. So so really be careful with these. Don't try to push them too much, but currently that long setup is clear. So let's see if it's gonna play out. And yes, of course, GJ, you can see GJ absolutely kind of, well, not absolutely, but pretty bearish. This one, beautiful uptrend. This one, kind of a downtrend. Why? Because of these two pairs. Okay, remember, like any of these JPY crosses are a combination of the main currency, the base currency, Euro GBP plus USD JPY. If GBP USD is choppy and it's going down, okay, then GBP JPY is also going to be choppy and potentially go down a little bit. If EU is pretty nicely bullish, right, then Euro JPY is also very likely going to be a little bit more bullish. Here, I mean, look at that. That's nice. Fully bullish, tapped in, boom, liquidity target, and then we just massively reversed. So I kind of had this outlook. It played out very nicely. But then we had bearish, and then the market chops for an eternity, and then another short right here that I see happening very nicely on Thursday. Very nice drop. And right now we are making a trend change and looking a little bit more bullish. So constantly keeps changing the bias here. Weekly time frame, crazy wick, absolutely choppy pair right there. No idea how somebody can trade that. Daily time frame, nothing. You can see again here, like look at all that compression. 1, 2, 3, 4 days of absolutely nothing. The 5th day massively sweeps the lows. Are we gonna come right now for that liquidity target? The 40 time frame is giving us a little bit of a trend change right here. Hourly bullish imbalance below us. Did EJ have a hourly? Well, it has a very small one. All right. Let's see. I mean, let's see. Here the last thing that we made is a 1 hourly bearish. So right, currently the sellers are in control. If that gets invalidated and we start printing bullish ones, we can potentially go for the liquidity. I would call a little bit more of a bullish bias on these JPY pairs simply because they are looking nicely bullish. This one can also be another potential scenarios, but I want you to know that I do not trade these JPY pairs. Okay, I'm analyzing them for you if you can find some value from that, of course. But that's how I look at the JPYs. Overall bullish. It really depends on what, of course, USD JPY is gonna do. If USD JPY starts holding from that hourly zone and pushes higher, that is really gonna push EJ and GJ to potentially go higher as well. So let's see how they go. All right, welcome to the futures part. So again, I want to start with a little disclaimer that I do not swing trade or day trade indices. I am scalping them, all right, after the New York Stock Exchange opens. So any kind of like macro outlook I do, it's usually like not how I would really approach that market, but let's see what happens. So we had like a little bit more of a bullishness on the market open. The market did not pull back into the imbalances here. It started guiding us higher, pulls back, higher again, pulls back. Then it actually taps into that liquidity target that I had. And then from there, we actually had a pretty big flush. Now, this is again the news of the bombings. And yeah, so I am having a small losing week this week on futures. It was pretty chopped up in New York session. It offered some setups. I took some partial stop losses. I actually did miss one or two wins. because it was just not convincing. And yeah, I didn't enjoy trading futures very much this week. And you can see within the daily candles as well, it's kind of getting a little bit compressed, not really committing. We flushed very nicely on Friday. Does that mean right now it's gonna guide us towards that liquidity point? Or, oh, we actually already took it. Okay, so we took out that liquidity point. Okay, so what's next? Are we going to reverse lower? Are we gonna go higher? On the hourly time frame, we're having that hourly bullish being created here, offering, showing us that the buyers really stepped in. However, we're kind of still tapping into that hourly bearish, but I usually disregard massive imbalances like that. Okay, because we're having candle 1, 2, 3, 4 candles already inside that imbalance. Okay, and then right now we're suddenly reacting from it. It is very, very, very mixed up right now. Hourly bullish, 1 hourly bearish, hourly also bearish to the left. It still looks like a push pullback for a continuation. I will be needing a little bit more time. Okay, and again, I don't really trade them like that like I do Forex, right? I just jump in on the New York Stock Exchange market. I have my strategy looking for a lot of confidence as well, but I don't pay a very big importance to the higher time frames. Okay, I always know where it's coming from. I always know potentially where it's going to. But again, I hope you get the point, right? I'm not gonna say, hey, hourly bullish, I'm gonna wait for that hourly bullish to tap and go long. No, if the market opens and starts giving me longs, I will be taking longs. So that is the state right now of the ES. Not loving it, not very convincing. We're having, again, a lot of stuff happening in the world. The US-China deal is ongoing. We're having some positive news there, so that should be popping the market a little bit higher. But right now, the new conflict between Israel and Iran is emerging, so that is driving oil higher. I see it's driving indices a little bit lower. So again, we have to be very careful with this. We're also going to be having the contract switch on Monday. That can also start bringing in some fresh volatility, because I've spotted that where we're having the last kind of weeks before the contract change, the market tends to slow down a little bit. Maybe that is another factor. Any futures traders watching this, let me know if you have spotted this as well. But yeah, this is it. I'm not bullish, I'm not bearish right now. Literally, I will be waiting for Monday to open up, show me some more price action, and then of course I will be aware of all the liquidity targets, all the highs and lows, and then see where the market's gonna guide me towards. Well, Nasdaq pretty much the same. Again, it offered some very good longs here. We actually did pull back into that hourly imbalance perfectly, and we reached the liquidity perfectly. I currently do not trade NAS. I'm mainly focused on ES. It's kind of a little bit slower, a little bit easier to trade. Weekly time frame, again, we are kind of breaking above that weekly, so this is now no longer relevant. We have that weekly zone. That is going to be a very nice dip pullback to make a little bit of a short-term correction to then potentially buy some more stocks. Because right now, if you look at the daily time frame, it's kind of going higher, but it's going higher in a very choppy manner. And honestly, if you look at the daily candles, like these 4 daily candles are not very convincing. They're not having a lot of conviction and commitment. Here again, we're having that liquidity points. Did the market take it? ES took it. This one kind of looks pretty equal. Let me check the low. 4710, 4710. So equal lows here. But ES took it. So again, that thing, SMT divergence thing that I studied from ICT, I don't use it, but could be a thing. Here we're having that again, that hourly bearish, and we do not have a hourly bullish, while ES has a hourly bullish. So very 50-50 here, right? I'm not bullish, I'm not bearish right now. I'm in fact a little bit more bearish because of the very recent conflict. I don't see a lot of commitment right here to the upside. I see massive sell-off, very corrective buy, and then I right now see a massive sell-off again on a Friday. So if we happen to potentially start printing some bearish price action, I will be looking for shorts. Again, targeting this liquidity, which on Nasdaq, it hasn't been taken. And of course, if the market starts giving me some bullish signs, I will be then targeting the buy side of the liquidity. Okay, this is how I trade it. No long-term outlooks, no monthly, weekly, daily time frames, just showing up every day, having a look at the very recent levels that we have that are very relevant, and then waiting for the market to show me, for example, on the 50-minute, on the 5-minute where it wants to go, and then scalping it, for example, on the 2-minute or on the 1-minute time frame. So let's see how it goes. US 30 or the YM is usually going to give us a little bit of an indication of what could be happening with the other two. And again, here we came in to sweep that liquidity as I've outlined. We actually even tapped into that hourly imbalance. Then we came in, and then look at how bearish that is, right? This is definitely giving us a sign that, hey, we are shifting a little bit bearish. The very recent liquidity targets are going to be that one, this low, and then all the way down to this low here. Okay, so we have a few. We can, of course, draw them all because they're going to be relevant if we definitely enter into a little bit of a dip from the top. 2%, yeah, we can definitely, 4% is usually a pretty nice dip. So if we manage to come all the way down, that would be great. A very massive daily candle after pretty much a very big consolidation here. And what I really like here on the volatile time frame on YM is that we're actually holding from that volatile imbalance. We came in and we are breaking the lows and we're closing below the lows. Like the other ones did not do that. They're not closing below that low. US 30 is doing it. So does that suggest right now that Nasdaq and ES are gonna follow? Or does that suggest that just YM is weaker, and then if Nasdaq and ES actually go higher, then this one is also going to reverse? We do not know. But what this really offers me right now is an insight that definitely we have a lot of sellers in the stock market right now, in the index market. Okay, so I will be looking for all of these recent lows here. You can see, even if you look on the volatile time frame, we just finished the week by taking out that low. So these two next lows are the next. If the market truly commits to the downside and continues to form bearish imbalances and price action towards these lows, I will definitely be looking for shorts, and hopefully that is also going to show up in ES and Nasdaq, so I can also trade them short. But YM is giving us that indication of the shorts, so let's see if it's gonna follow through. All right, DAX is definitely starting to look like something this week. We had like these daily bullish imbalances, and I said, okay, we can potentially continue higher to new all-time highs, but no, the market said no, and it introduced a lot of bearish price action and structure, and it has been flushing all week. So let's check out, of course, from a weekly time frame, even a monthly. Do we have a monthly imbalance? No, we're currently forming one, so that is not relevant. Weekly time frame, we are potentially attacking that liquidity low right now because we're getting very close to it. And then, of course, the next potential support level could be this weekly zone. On the daily time frame, yeah, we have been flushing every day, and of course, as it starts flushing, it even keeps expanding lower and lower. So there is that daily zone, and then we have another daily zone with a pretty big gap here. And then on the volatile time frame, we are already working from this volatile zone. Okay, so will the market reach out that liquidity before starting to pull back, or are we going to pull back to the daily imbalance, pull back to fill the gap, and then to potentially go lower? These are the two situations that I see. Now, what is going to happen after that liquidity is taken is very questionable for me. Are we going to break and close below it, retest it, and then potentially continue to the weekly? Okay, or are we going to break in and sweep it and print some bullish order flow and then start coming back into the daily? Okay, so three scenarios here. Scenario one, pull back into daily, fill the gap, and then start shorting towards the liquidity. Scenario two, break below liquidity, retest, and continue towards the weekly. And scenario three, right, break, sweep, bullish order flow introduced, and then we target the daily imbalances. Okay, so that's how I would analyze DAX. Again, it's a super unpredictable instrument. You don't know when it's gonna move. It has a very good Q zone during London session, but I tried to trade it a while ago. I didn't find any consistency with it, so I don't do it anymore. But let me know if any of you are trading DAX. Let me know if you have been capitalizing on these shorts, and what are your thoughts going forward on it. Okay, so let's throw a little bit of a recap. Now, again, fundamentally, the DXY is bearish. So I'm going to be having a bearish bias on the DXY. We're pulling back into a daily zone here. So right now we are kind of reacting from it. It hasn't really shown me a lot of commitment right now. It's kind of staying in the middle. So if I truly start seeing some bearish order flow starting to kick in on Monday and Tuesday, I will be looking to short towards the very recent liquidity target. And I never exclude the opposing side. EURUSD also pretty looking bullish, right? Very nice impulse to the upside. We're pulling back. We're having a daily imbalance below us. So there are my two scenarios here. We either continue without tapping into the daily by printing bullish order flow going higher, or we actually pull back to the daily with some bearishness. You can even take shorts and then shift bullish from there. That is looking pretty nice with two very clear bullish scenarios. GU, AU, NU. I am not going to be trading these. They're very confusing. They're very choppy on the hard time frames. I'm waiting for more development. Gold is looking very nicely bullish as well. I have one clear outcome that I really want to see is I want to see a daily bullish imbalance to be created on Monday. Okay, and then to potentially trade from a new daily imbalance that is going to be created on Tuesday, right? So it's going to be ready to be traded from on Tuesday. So that is my plan, because currently if I'm looking for longs, we don't have any zones to work with. If we want to immediately go long, the market should immediately start expanding higher. But as of right now, I will be waiting for Monday to close and then potentially see if we can long it on Tuesday. USD JPY kind of giving us a little bit of a short-term bullishness here. So is it going to follow through? That is the main thing that I want to see. This flower imbalance is the very key, because if it fails, we can guide us lower. If it holds, then it can guide us higher. And then EJ is looking like pretty nice longs, very close towards the liquidity, but it kind of feels like it's already gone. It's very close. GJ is also looking a little bit more bullish, although I would prefer EJ in this point because EU is stronger than GU right now. So these are the JPYs, kind of mixed bias on USD JPY, and EJ and GJ are looking a little bit more bullish. So if UJ actually picks up the bullish steam, that can cause EJ and GJ to go up. Indices are also a little bit 50-50. I'm seeing some signs of a pullback. Maybe we enter into a little bit of a dip. It's a little bit uncertain right now, again, with what is happening in the world. So it's really going to be important to stay very vigilant and react to the market. I don't have a clear bias right now, honestly. It was a pretty choppy week. We had a lot of bearishness being introduced here from the conflict between Israel and Iran. So is this going to follow through bearish? We have to see. YM is giving us a very clear sign that it's actually going bearish. So are NQ and ES going to follow? Let's see. I will be looking for more bearish order flow and then start targeting all the liquidity levels that we have to the left. And we can also see DAX already is massively flushing. So that could be also another sign that we can be seeing more lower price action on the US indices. So let me know, guys, if you enjoyed that outlook, and if you stayed up until now, let me know what is your favorite pair going into next week. Let me know how you also performed that week. And of course, I'm going to give you an update next Saturday, or if there is something clear happening by Wednesday, I can also make another update. So take care, have a lovely weekend, and talk to you soon.